Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar and this is effective for the week of August 26, 2024. Let's get started. SEAF signals for this week. We have utilities, consumer staples, and financials. Consumer staples comes in and takes over for real estate, which dropped down to 5th overall in its rankings. Still in the favored ranking, but due to a weak trading week, fell out. Consumer staples obviously having a strong week with trading week of 1 and then tactical month of 3 and 4. Financials has a little bit of a rebound with the trading week of 2, and utilities remain strong, especially on tactical month of 1 and a strategic quarter of 1 for overall ranking of 7. A couple interesting things to note. Technology drops way off. We lost a little bit of the influx on the strategic quarter, dropped us into 8, and then with a rough trading week, after what were 2 strong trading weeks, we kind of have a little bit of a hold off. And last week we mentioned that technology, and we'll show a little bit in the charts, was in a potential spot for a leadoff. And I think the thing to kind of clarify with these leadoffs or these potential situations is we're looking at the chart. We're not projecting. So based on the setup of the chart, things looked good. But as I always note that this wasn't a SEAF signal. Our top 3 are our SEAF signals. We've back tested that. That is where we can show our strength. When I'm highlighting certain situations like I will today with healthcare, these are just setups that we see. Now, because we're not projecting any of these cash flows, all it takes is, some momentum to drop off for these things or lack of sustained momentum for them not to build up. And in this case, technology fell off with the trading week of 10. Kind of to round things out, energy, another bad week, and now ranks completely at the bottom with the 33 score, which is the worst ranking you can have in energy. Heading over into our heat map. Our heat map really is taking shape into what I like to see, and that's kind of showing these greens across the board with our reds kind of clumping in at the bottom here. There's a couple of exceptions here. We're seeing communication services and consumer discretionary with some greens. These were at a 0.05 and 0.06 respectively. 0.06 for communication services, 0.05 for consumer discretionary. So while they are positive, showing a little bit of green, overall not a lot to move the needle here with the broader parts of these things not showing any major momentum in the tactical month of the strategic quarter. We'd like to see some of those numbers strengthen before we make any calls on those. Energy means deep red with a 0.46 outflow on the weekly sheet at energy, and then technology with a 0.39% outflow after what was a really strong week last week, dropping it toward the bottom here. Overall, looking pretty solid. We had some mixed days in terms of inflows and outflows overall into the sector spiders last week, but we are showing some strength. Healthcare, I wanted to kind of denote here. Healthcare showed a 0.14% increase on the trading week, which is relatively strong for a level 3. And then showing some strength in the tactical month. We're going to highlight this a little bit more in the rainbow charts in just a second, but broadly, healthcare starting to look positive. Technology. So I want to address this. As we saw last week, we were headed up in this favored ranking. We were kind of popping up in the favored. We were seeing some corresponding moves in the relative outperformance, and I mentioned we have some leadoffs. Taking with leadoffs, using a baseball analogy, you have a chance of getting caught stealing, or you have a chance to take in the base. So in this case, we got it reversed interface down to a void. We can see that relative outperformance move, take that corresponding kind of hook, and just broadly, heading back into that avoid after we did have some of that sustained success. Is it possible this thing rebounds again? That is very much so. In this case, we came in, touched favored, dropped into a void, favored, avoid, and then we had a little bit of sustained success up into the favored ranking. This is just going to have to be a wait and see for technology, but a little bit of a reversal from last week's strength. Going to financials. Financials looking relatively strong. We started to, give up a little bit of wind here in terms of dropping in the favored rankings, but stayed a SEAF signal through this little parts here, and we are seeing some nice relative outperformance, which is continuing this broader trend of outperformance that we've had for financials for the better part of the last year. Looking into utilities. Utilities rebounded again too. As I mentioned last week in my video, utilities was approaching some of that resistance that it ended up breaking through, and we are seeing that little bit of a rebound in that favored, headed up in the positive direction, and a reversal of this hook for also some positive relative outperformance, creating a little bit of a broader outperformance trend in utilities. Consumer staples. Consumer staples is a little bit of a slower moving sector in terms of how it moves with its flows. As you can see here, we had some pretty slow movement up in this avoid to neutral, kind of peaking here. We have now made that jump into that neutral favored and a strong jump here in the overall favor for consumer staples. This move here from neutral into favored has resulted in some positive relative outperformance, and we are directionally headed positively for outperformance for consumer staples. As long as money continues to flow in there, it was 1 on the trading week, 3 on the tactical month, can hope to look to see some outperformance in consumer staples. Lastly, we're going to look at healthcare. Healthcare is looking positive in the sense that we are picking up this favored. We have touched from neutral into favored, and we are seeing some nice relative outperformance trend after seeing a real underperformance trend going back to this time last year. So nice to see healthcare take some relative outperformance to SPY, showing some favored ranking. It is not a SEAF signal. It's currently ranked 4th. But if we see some continued movement in the asset flows into healthcare, ideally project up to this upper favor, we could see this thing move into becoming a SEAF signal. It is not one yet. But again, overall, with these leadoffs, what we're looking for is opportunities in the chart that show that we could potentially get some relative outperformance going forward. Trying not to project too much, but noticing the chart patterns. Right now, healthcare looks like a good place to lead off. But overall, not a SEAF signal, and we got to follow our model. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.